AFME represents the wholesale capital markets in Europe, and as such, our members have a lot of expertise in bridging the gap between corporates who needs funding of any size and various types of investors who have money to put to work. And because we have that unique role as arrangers in the middle of this whole process, we have insights that we hope can be valuable to the European Commission and other policymakers. We provide research, we provide expertise through our member forums, workshops, educational sessions, one-on-one meetings, publications, and lots of other visible ways to try to make it easy to understand how the capital markets can provide the money that people need. Companies of any size in Europe, whether they're large multinational global corporates, whether they're mid-sized companies, or the tiniest local fish and chip shop, can need a wide variety of sources of funding, ranging from loans, bonds, equity, in different type of markets of different sizes. Without that type of risk capital, Europe is going to have a hard time growing in the future. The main issue with Europe's capital markets is that they're fragmented. There are 28 member states, there are regulations and rules, tax issues, HR functions that make it difficult for businesses to grow. And part of our role at AFME is to help identify which things could actually make it much easier for businesses to expand. Capital Markets Union can provide a lot of benefits in our view. It's just too expensive and too difficult for businesses to expand cross-border and to look into new markets. Three things which we think could help a lot are changes and simplifications to corporate insolvency law, changes to securitization rules, as well as listing rules to make it easier for SMEs to list. Some of the main differences between the States as well as Europe are that in the US, there's a much larger pot of private pension money, approximately 15 trillion euros of funding available in the States in private pensions as compared to approximately 4 trillion in Europe. That's long-term patient money for both debt and equity, in particular equity, that Europe needs to expand rapidly. Europe is simply too reliant upon bank funding, and there is a looming pensions crisis in Europe. We do believe that it's important for pension funds to have more flexibility to invest long-term in various asset classes. We think changes to insurance companies, incentives to invest in securitization as well as infrastructure projects is very important to giving them the resources as well as the encouragement they need to invest in these key asset classes. For equities, there are a number of changes, including changes to the prospectus directive, as well as just investor education on why both retail and wholesale investment is so crucial to growth.